Welcome to the deep dive. Today we're jumping into Arte Star Residences. It's a property development in KL. Looks incredible on paper, promises a lot.
Yeah.
But there's definitely a complex story underneath. Our mission here is really to break down the due diligence report for you, help you see the full picture, before you make any big calls.
Exactly. This project, it presents a really compelling proposition, I'd say, but complex, definitely complex. For home buyers, for investors, you really need to grasp both the upsides, which is significant, and the risks, which are just as critical.
Okay, let's unpack that. The report kicks off with the location. Sungai Besi calls it exceptionally strong advantages. What makes it stand out so much?
Well, Sungai Besi itself is really transforming, and Arte Star, the indicative prices start around RM 330,000, so it's relatively accessible, which is a plus.
Okay.
But the big thing, the real game changer they mention, is the TOD status transit-oriented development.
Right.
You're looking at walking access to 3 major rail lines. You've got KTM, LRT, and the upcoming MRT3 Circle Line.
3 lines, wow.
Yeah. And on top of that, direct access onto the Salak Expressway. So connectivity-wise, it's very well positioned.
That connectivity, though, it seems tied to something bigger. The report mentions quite a bit. The Bandar Malaysia Catalyst. What is that exactly? How does it factor in?
Yes, Bandar Malaysia. That's the huge, RM 140 to RM 150 billion mega project planned for the old Air Force base nearby.
Right, the RMAF base.
Exactly. And it's now been acquired by KLCCH, which is Petronas's property arm. That's a big deal.
Yeah.
It injects a lot of credibility, kind of de-risks the whole surrounding area, you could say.
Okay, so credibility boost.
A major one. And Arte Star. It's just 3 train stops away. So it's poised to benefit significantly from that whole development ripple effect.
But there's a catch, isn't there? The report mentions the timeline.
Yes, that's the crucial point.
Yeah.
Bandar Malaysia is a massive undertaking. We're talking a 50-year development horizon.
50 years.
50. So what that means for you, if you live at Arte Star, is potentially decades of nearby construction, noise, dust, disruption. It's a long-term consideration.
Yeah, that's a serious livability factor. Okay, let's shift gears a bit. The report also flags quite strongly the developer's track record. Arte Corp.
Yeah.
It mentions a reputation for flashover substance.
Yes, this is highlighted as a significant risk, and it seems well documented. Arte Corp does have this tendency, to really focus on the Instagrammable design, the aesthetic.
Looks great online.
Exactly. But sometimes that comes at the expense of, fundamental build quality and, perhaps more importantly, long-term maintenance. We see specific complaints mentioned from residents in their other projects.
Like what kind of complaints?
Things like shaky water taps, drains getting clogged easily, even reports of pest infestations in some places.
Pest infestations. Okay, that's definitely a red flag. What about other things mentioned, like the lift system issues at Art Plus or security worries at Artemont Kiara because of Airbnb rentals?
Precisely. Those are examples mentioned. And if you think about it, all those really elaborate, bespoke facilities they build, they look amazing initially, but they are inherently more expensive to maintain properly.
All right, makes sense.
So you get this maintenance fee paradox. The fees they charge maybe around 30 to 33 cents per square foot based on other projects might just not be enough down the line. And then those fancy amenities, they can become liabilities, not assets.
So the pools get murky, the gyms get run down.
Potentially, yes. And another thing the report flags is a critical discrepancy in the total number of units. One figure says 846, but other sources apparently suggest up to 2,705.
That's a huge difference.
It is. If that higher number is closer to reality, you're looking at extremely high density. Massive pressure on shared facilities, lifts, everything, plus a very crowded internal market if you ever want to sell or rent out.
And don't forget the SO units, higher bills, right?
Good point. Yes, even though they have HDA protection, those SOHO units typically mean 30, maybe 50% higher utility rates and property taxes for you.
Okay, so pulling this all together, what does this actually mean for you if you're considering buying here, either to live in or invest? It seems like a real mix.
It really is a study in contrast. Look, the potential for capital appreciation, it's definitely there, very high even, thanks mainly to Bandar Malaysia and the MRT3. But that appreciation is highly dependent on the management quality.
If the building isn't looked after.
Exactly. A poorly maintained building just won't hold its value or appreciate as well, no matter the location. And for your own livability, you have to weigh the trade-offs. Are you okay giving up some space, perhaps, for access to lots of facilities that might end up being quite crowded?
That experience versus ownership dilemma they mentioned.
That's it. The initial wow factor might fade if the day-to-day reality isn't comfortable or convenient long-term.
So given this complex picture, what's the practical advice? What should you actually do if you're tempted by Arte Star?
The absolute key recommendation is do your own on-the-ground verification. Don't just rely on brochures or show units. Meaning, you must go and visit other completed Arte Corp projects. Specifically, the report suggests Arte Mont Chiara and Arte Plus over at Jalan Ampang. Go there, spend some time, see how long you wait for a lift, check out the facilities. Are they busy? Are they clean? How's the general upkeep?
Talk to people who actually live there.
Absolutely. If you can, try to speak with existing owners or even members of the joint management body, the JMB. Get their unfiltered take on things. Their day-to-day experience is invaluable, much more telling than any sales pitch.
Right. So Arte Star residences. It really boils down to a high-stakes calculation, doesn't it?
Right.
Amazing location potential versus a developer with, let's say, a challenging reputation.
That's the core tension. And maybe the thought to leave you with is this. Will those powerful location drivers, Bandar Malaysia, the connectivity be strong enough to overcome the very real risks tied to the developer's track record? Or could this become a classic value trap where the initial appeal leads to disappointment and rapid deterioration down the line?